It's uploading right now.
Okay.
All right. Happy Thursday.
Happy Thursday
Welcome
on this long
everybody
Happy
weekend.
Thursday.
to our market report. We'll give it a minute or two. We'll wait for some more people to come in, and then we'll get started.
Fantastic.
Perfect. Anyone doing anything for long weekend?
I'm in Vegas. I'm coming back in red eye. So
There you go. Red eye too. Look at that.
yeah,
We're
it's
going to be working away.
yeah. By the time I get there, it will be apparently 6 a.m.
You coming back
Wow.
tonight?
Okay.
I'm coming back 11 p.m. Yes, Jonathan.
Oh.
Wow. Nice. So your tomorrow is a write-off.
Well, and I have a 9 a.m. appointment tomorrow morning. So
Wow.
Jesus.
Have your suit on the plane.
that's exactly what's going to happen. This is an interesting software. How do we know how many people are in?
we got a good amount of people here. So let's get started. I see we have some comments here. So everybody, we're going to be doing a little Q&A at the end of this. So any questions will be answered here live. And Steve, you can take it away.
Good afternoon or good evening, participant here. My name is Steve Tabrizi. I am the Chief Operating Officer with Remax Hallmark Group of Companies. I've been being in real estate business for 28 years, and I do this talk on a regular basis. In fact, I do quarterly market report. And I'm not, as a full disclaimer, I'm not an economist, but I have a very strong passion for numbers. And I research and I study on a regular basis the trends in real estate market. A lot of people ask the question, what is the trends? I don't only focus on sharing with the audience tonight is the market is good or bad. I tell you in the reality of what has happened in our market and what I predict is going to happen in our market. I've been predicting the market report for the last 12 years. My prediction are literally 10 out of 10. May sound a little bit cocky or arrogant, but you can check my market report on Teachable Moment. And I have a series of the report and YouTube and interviews with multiple economists. Anyway, so tonight I will spend about probably for the next 15, 17, or maybe maximum 20 minutes on my slides, share with you what has happened really in the market in 2023 and what is going to happen in 2024. So let's start. So basically, the housing was the top of the headline in 2023. I'm sure many of you follow the social media, newspaper, and one of the reasons that the market was the top of the headline primarily was the focus on the news on the affordability due to the increase of the interest rate. So there were several factors that really were the headlines of the last year, 2023. And we're going to basically talk about majority of them. Interest rate, pricing, immigration, landlord and tenant issue, and pre-con or pre-construction market, which is the Zaragon team specialties on the pre-construction and the condominium market. So what happened last year in terms of the interest rate? In February of last year, Bank of Canada had an interest rate at the point of 4.5, and they basically made an announcement in February that they will cease the interest rate hike in February. That caused a rebound of the market from the February to June, and Bank of Canada's government really was hoping that 4.5% will do it, and the Canadian, they will stop spending money and shopping. And the reason behind the increase of the interest rate for the last probably 14 months is simply bringing the inflation down. Inflation last year was sitting anywhere around 3.5 to 3.8%, as of today is sitting at about a 2.8%. The goal of the Bank of Canada always has been, not only the Bank of Canada, the most developed economic countries around the globe, is to bring it to 2%. But June of the last year was the last blow, and that's why the market really shifted. The Bank of Canada came out and had 2 consecutive interest rate hike. And basically the Bank of Canada's interest rate as of today is still sitting at a 5%. Historically, when the Bank of Canada's interest rate, whatever is set, is usually at 2 or 2.5%, in some countries as high as 3%, then is basically the mortgage rate going to be in the market. So we had the mortgage rate of the almost 7 to 7.25 in the last year, till basically the December of the last year. Then we see moderate changes. So these increase of the interest rate reduce the affordability of the consumers and the ability of them to purchase. It caused the investor market really pause and see what is going to happen to the market. But interestingly, although we had almost about 10 interest rate hikes since middle of the 2022, March of 2022, we started, and we basically finished by June of 2023. Our real estate market didn't crash. Many economists and headline, they were talking about the Canadian market has been resilient, and Canadian economy has been resilient towards the interest rate hike. But the truth was very simple. During the COVID, Canadian, they managed to save a tremendous amount of cash because they were working from home. They were not able to travel. The interest rate was bottom rock at almost about a 1/4 point. Stimulus packages from provincial and federal government, CERP payment, you name it. So imagine that you can't travel. If you want to put it in a simple context, you can't travel. You're not spending. You're not traveling to work or home. You're really just basically accumulating cash. And the people who were basically counting to have a mortgage payment of the regular mortgage rate of, let's say, 3.5% to 4% for 5 years term, they had mortgage rate of almost about a 1.5% to 1.8%. So it caused them to save a lot of money. And the other factor was immigration, which we will talk about it a little bit further. So sales activity after the June of the last year, which was the last blow to the Canadian housing market, finally got the message. And the message was very loud and clear. And we noticed from June of last year to almost December of the last year, the sales activity across Canada dropped almost anywhere between 35 to 40%. So this is a big media headline. A lot of people, they just say, 40% of the market dropped, so the real estate market is going to crash. But again, the market didn't crash. The reason I said why the market didn't crash, beside also the other 2 points that I just shared with you, one was the saving of the consumers, one was the immigration. Also, mid-2022 to early 2023, that 12 months when the interest rate from early of the basically 2020, when the COVID started, the market was really an artificial market. We had the growth of the 30% year over year. Was it a real market? No, it wasn't a real market. Imagine the government make an announcement again today and just say the money is free. So consumers from June of the 2020, right after the sort of a semi-opening of the economy, till almost, I would say, February of the 2023, they went on a total madness of the house shopping. Why? Because interest rate was as low as 1 to 1.5%. So, and then when the headline comes in 2023, said, oh, the transaction in the Canadian real estate market dropped by 40%, please don't pay attention to that. If you really want to know how much the transaction has dropped, you should do an average of the 5 years, and you have to remove 2021 and part of the 2022 from that average calculation. Then you will see our market is really performing very similar to 2019 or early 2020 before the COVID started. So the notion of that the market has dropped by 40%, it's really not true and accurate. But the headline news, they just like to write the headline, the negative headline, but they don't really do the research in terms of the numbers. So pricing strategy was a big issue in 2023. Sellers that basically were saying, what should I do? Should I wait? The market going to rebound? And the buyers, majority of our buyers, particularly the first-time buyer, they basically took a pause because the buyers were all praying that the market going to crash and they can have an opportunity. Yes, we had a price correction. When the market went down by 35 to 40% in terms of number of the transaction, we had in some area of the Toronto and Ontario and GTA, basically price correction of as high as 10 to 15%. And if you want to look at it at a dollar perspective, almost anywhere between $200,000 to $300,000 in the housing. And in a condo market, the price correction was in resale quite minor. It was maybe anywhere between about $50,000 to $100,000. But again, the market didn't crash because the seller decided to halt and keep the inventory low. And the buyers also at the same time, the smart buyer, they took advantage of some of those price dropping in certain areas that the seller basically either was under financial stress or they had other plans such as move up or moving to different cities and they bought. But the market activity wasn't as healthy as we expected. So, but overall, at the end of the 2023, the interesting factor was if you take a look at this map, you will see Toronto, Greater Toronto area. We only had a price drop of when we added up everything because we had a rebound almost from the starting of the mid-November till end of the December, and the rebound now it continues up to this month. When you adjusted all the numbers, we had only a price adjustment of the 1.3% in negative territory. In Quebec, actually, the price was still positive. And if you take a look at the big picture in Canada, you don't see even a double-digit drop in the prices. So it tells you how strong the Canadian housing market it is due to the fact that the Canadian are not like American. We don't have a high debt ratio in terms of our purchase prices and mortgages. Majority of the Canadian in the last 5 years are putting minimum anywhere between 20 to 25% down. So if you take a look at also what is happening this year in homes market so far in 2024, you can see as a new listings in terms of the latest month, which was basically February. We don't have the month of the March. The listing are slightly now coming up nicely, but you will see the price changes also increasing rather than decreasing. The price of the homes, as an example, in a condo market in Toronto is flat, but in some areas such as Peel and Durham, which are the suburbs, we will see some positive, and in Halton, we will see some negative. Some people, they ask why the Halton, for example, is negative. Some areas during the COVID, they had a massive double-digit growth. So these are the adjustment of the artificial prices that we had in the market. And if you take a look at the prices in terms of homes, you will see the city of the Toronto only down February of this year compared to the February of that last year, only by -4%. And we see also the new listing is now increasing. Question for both category of the homes and condos, people are asking why the inventory is increasing. When the confidence in the market is back, now those sellers that they basically took a pause and they hold their plans, they're now thinking, okay, this is maybe the time that I go in the market, either if I'm downsizing or upsizing. We'll see a very healthy activity right now in our market, anywhere in the price range of $600,000 to below $2 million, both in condos and housing. Of course, condo is anywhere between probably 600 to a million, million two. We see a great healthy activity, and housing we'll see anywhere between about $800,000 to $2 million. And then the minute you go above the $2 million to above $4 million, we'll see a pause, because that's what we call the luxury market. And the super luxury market, anywhere above the $5 million, interestingly, we see a very healthy activity. And people ask why the super luxury market is active and is performing well. Those people that they are in the luxury market and their home worth maybe about $4 or $3 million or $5 million, pre this change of the market, if they wanted to be entered into the super luxury market, they had to pay 8 or 9 or 10 million. but we have seen a nice price adjustment in the super luxury market, and an $8 million home now is sitting at about 6.5 or 7. So therefore, the consumers are really taking advantage of the change of the prices in the market. So who is dominating our market? Sadly, baby boomers still are dominating our market. They're controlling the market, and we'll see the younger generation, such as Gen Z and Gen X and Gen Y, they want to enter to the market. It is a promising them for enter to the market, but their battle is basically the affordability. And that's why we see within the city of the Toronto, if you want to call it core, which is anywhere south of Steeles, all the way to perhaps Morningside, and then on the west side goes as far as airport, and the south is the water. Really, when the average price is sitting anywhere between about million to $1.4 million, is not as affordable for an entry market. That's why the suburbs are really booming, and they are really outperforming the core market. The core market, it's held by baby boomers. Baby boomers are those one that they bought many years ago, and if they have even one house, and 5 years ago their bungalows, let's say in the city of North York, was worth about $1 million, now the same bungalow is worth about $1.7 million. And I'm sure you heard on the news and media during the COVID or during the last 5 years, the bank of mom and pop is basically being the best bank for the younger generation, and they don't mind to lend to their children, because they're also their retirement asset has increased the value tremendously. So baby boomers, probably they were supposed to keep their homes till the age of 75 or 80 years old, but now the new stat shows that the baby boomer, maybe they will keep their homes all the way to the age of 90s, because also for them, moving to the suburb area, for the lack of the social benefit and social services such as the hospital and transportation, the way the city has grown, it's really a scary moment for them that they don't want to move. And they might also consider moving with their children or allow their children moving with them. And this is going to be the new type and the new demographic of the living style in Toronto. So if you take a look at this, Canadian seniors are most likely to sell their home in the 90s. And if you take a look at it, also change in the total number of the owner household between the 2011 and 2021, you see the biggest category was the baby boomers. So which cities they were attractive from mid 2023 and going forward? You can see Barrie, Guelph, Mississauga, Ottawa, City of St. Catherine, and London. Why? Because the younger generation, due to also the ability to work hybrid model, which is basically work maybe 2 days from home and 3 days from the office, or vice versa. Employers, they try to bring everybody back to the market, back to their offices, but they are facing a big backlash because the cost of the transportation, the cost of the living is gone through the roof. And the employees are saying, I will still work with you if you allow me to basically work from home and remotely. That's why these suburb or these new cosmopolitan cities such as Ottawa, or such as the suburb of the city of the Toronto, particularly the Durham, which is the east of the Toronto, and also Barrie, which is the north of the Toronto, are becoming very attractive. Soon there will be a notion of the GTA no longer will be just the basically north of the up to the new market. The GTA probably will expand to be an area of the Simcoe County, and in the west it won't be anymore. Oakville is probably expand to Wentworth, which is the Hamilton and Niagara region. So what is the biggest problem that we have? The biggest problem that we have is immigration. I'm sure you heard on the media and news, Mr. Trudeau has lost his popularity. 74% of the Canadian, they pray to God that he will resign this year, not waiting for the next year of election. But obviously he's sitting there and he's basically saying, I'm trying my best. But what he has done, when you have a minority government, by the way, I'm not trying to get to the politics business here, but I will express my personal opinion. When you have a minority government, which is a coalition of the NDP and Liberal, you see majority of these policies that we got ourselves into the trouble of the reducing the benefit that the Canadian they had for years, such as the health services, such as the lack of the planning and in terms of the transportation, highway system, the transit system, is because of the massive, when I use the word massive, incoming bound of the immigration. Immigration policy was supposed to be about 350,000 quota per year. Then they increased it to 500,000, but they neglected to disclose once the news and the media, they investigated, to talk about the work permit and the student visas. So we brought almost about a 1.3 million people last year into Canadian market. Out of the 1.3 million, the stats are not accurate. Some suggest that 80% are settling in GTA, and the historical data shows about 65%. I do believe it's about 65%. And everybody says why they are not pushing them to go to the other cities. Out of the 40 million Canadians that live in this beautiful country, almost about 17 to 18 million are living in Ontario. And Ontario is the hub of the job market. Ontario is basically the state of the New York, and where the money and the job and the economy thrives. Ontario is the province that basically is the backbone of the Canadian market. So, and if you take a look at it, work permits holders are 540,000. So it doesn't matter if they buy a home or they don't buy a home, but they need shelter. When they need the shelter, they put a burden on the system. They put a burden in terms of the inventory. They put a burden on the health system. They put a burden on the pollution. They put a burden on the traffic that we have, infrastructure. So you name it, this is the problem that we have. And is this problem going to go away? I doubt it. They made a recent announcement that we are reducing the student visa from a 450,000 to about 350,000, but it doesn't matter. It still doesn't solve the problem. We need to really go back to the quota of the 550. People are asking why the federal government is doing this. Sadly, Canadian birth rate is negative. Canadian younger generation, I'm sure we have a bunch of them on this calls, they don't like to get married. They don't like to have children. I have two of them at home. They just want a nice and easy life. And we don't have enough also specialized from the skilled worker. Could be construction worker, could be health system, could be engineer, could be doctor. So we keep bringing immigrants, but the system is really broken. The system was designed at the era of the Jean Chrétien, almost about 30 years ago, but the system really has failed to address the services that the new immigrants needs to enter the Canada. And what are those services? Housing, transportation, jobs, health system. So you have a old system and you're putting more demand on it, and it's going to be basically a disaster. If you take a look at this chart distribution of the new immigrant, 47% of them, the Stats Canada shows that they are settling in Ontario. Now, the challenge of the growing demand, even the suburb, Canadian as a whole now, it's sitting as on the number one country among the developed country in terms of the population growth. Last year, we had 3.6% population growth. We are almost competing with China, but we are basically bringing new people from a different background, different culture, different diversity. And as you can see, the growth in those suburb cities are growing too. Barrie is sitting on the top of the list, then London, Vancouver, Oshawa, Windsor, and the list goes down. And you can see in Toronto, still, although it's expensive, but we had a 2.1% increase of the growing demand because of the population. Another sad story, Ontarians are leaving Ontario. Younger generation are just saying, forget it, I'm going to Calgary, I'm going to US. We were the number one province last year. We lost about 36,000 permanent Ontarian citizen, permanent residency. They left Ontario because basically they can't cope with the cost of the living that it does exist. Mortgage payment increases and expected to increase if the interest rate doesn't drop by the next year. Why next year? Next year is a crucial point. 2020, COVID happened. a lot of people bought between the 2020 to 2021, and majority of the people are in a 5 years either variable or fixed. And if the mortgage rate doesn't drop, basically your mortgage payment, which was based on a 1.5 to 1.8%, suddenly now is going to be at today's market of the 5 years is anywhere between about 4.9 to 5.2. So we expect that the mortgage rate will increase anywhere between the end of the 2024 and continue to grow in 2025 and 2026. That's why it will be very prudent for the Canadian government, particularly federal government, to consider lowering the interest rate, which we will talk in the next few slides, and we will share with you our prediction. So what do you think going to happen in terms of the interest rate? Do you think the interest rate is going to go up or down? And it's really a correlation, also direction with the pre-construction market or even the housing market. I do believe that the federal government has reached its point of interest rate and controlling the inflation. The inflation for the last 2 months consecutively is dropping down. I want to also share with you something that Canada has done in 2016. Majority of the developed countries, they have a weighting average for, they call it consumers index. Consumers index is about housing, grocery shopping, cost of the transportation, which is the gas, transit, miscellaneous, travel, tourism, you name it, everything else. Canada in 2016 decided to increase the weighting average of if they calculated based on 100%, they decided to give housing 33% of that 100, versus in US and in most developed European countries such as Germany, France, England, it's only 22%. If we do as of today, go back to 2016 calculation of how to calculate the inflation rate or CPI, right now our inflation actually is below 2%, is 1.5. People are asking why Canada did this in 2016. In 2016, Canadian government realized that the Canadian economy from the energy sector has shifted mainly towards the housing sector. Housing sector is not only buying a condo or buying a house. It has also a lot of attachment to it: construction, finance, insurance. If you add these 4 elements together, it's almost represent 40% of the Canadian economy and GDP. At that moment, they realized that they better increase the housing shelter weighting average. So therefore, it's really making it more difficult to reach the target of the 2%. But the bond market, which is the performance of the mortgage rate, is now really stalled and is actually going down and maybe have a small movement up and down. And we have noticed the banks are becoming aggressive. The banks suddenly are now offering 5 years fixed mortgage anywhere from the 4.69 to 4.99. So we strongly feel that the Bank of Canada this year, perhaps sometimes in June, as soon as the inflation rate reach anywhere between about 2.5 to 2.6, we'll have the first drop. And the first drop will be a quarter point. My prediction is that in 2024, we will have maximum half a point drop. So you bring the rate to 4.5. The minute the rate comes to the 4.5, I'm confident the Canadian bank, they offer the mortgage rate anywhere between 3.95 to 4.25. And there are some economists out there, they're talking about 0.75 to 1.5 drop. I don't think it's going to happen. The governor of the Bank of Canada is very much concerned about the demand. 1.2 million immigrants, and they are actually thinking they're going to be another million this year. So I want you to visualize this. We have a supply issue for years. Now we have a demand issue. And in December of last year, our market nicely started to rebound that we have now multiple offer again happening in a popular demanded area. We had excessive demand of the pre-construction of the condos that they got ready. We see that inventory slowly is depleting. Probably is going to be the last segment to recover. Probably needs another 6 to 8 months. But because of that demand that we see out there, the Bank of Canada's government is quite worried if he dropped too fast, we may be back to square one of the total madness, and he doesn't want it that way. So let's talk about the GTA new condominium. Obviously, from 2017, there is a list of the project that they were supposed to be delivered by 2020 and 2021, but because of the COVID and the shortage of the supply, they got delayed. So late last year, and particularly this year, and maybe next year, we're going to have a massive amount of the inventory of the pre-construction homes that are going to be delivered. So the new condominium buyers, they were facing a few things. One, obviously, the mortgage approval because of the rate, and then the investor sector. The investor sector, their argument and the idea was basically, I don't want to take an occupancy, I don't want to basically close, and I want to just simply flip it cash on cash. And historically, it's been great rate of return. You easily make almost anywhere between 20 to 30% on an annual basis on your deposit. We see now the best opportunity in the condo market is for assignment. Why people ask the best opportunity in the condo assignment? Yes, we went as high as $1,700 and $2,000 in a condominium market, which was really not justifiable. But one problem that we have to acknowledge, the cost of the construction and the cost of the land development, cities' levies are not going to change. They're not going to drop. Today's market, if a developer that want to build a condo, by the time they finish all their 3 or 4 years waiting to get the approval and shovel the ground, their minimum cost is anywhere between about $900 to $1,000. So obviously, any developer, any smart businessman wants some sort of a profit. We are now seeing fantastic opportunities in a condo market that the people who bought in 17, 18, or 19, or even early 20, when the market didn't get the madness at the price of $900 to $1,000, they are actually selling them at the price that they bought. So don't miss that opportunity. If you're a first-time buyer, jumping that. If you're an investor, jumping that. If you believe that the condo market is going to go back to the $600-700 per square feet, dream on. I will make a bet with anybody in this audience. If that happens, I will offer $1,000 dinner to anybody that is going to happen. It's not going to happen. And those are the opportunities of the one time it's going to happen. The demand in this city is going to drive, sadly. 10 years ago, I had a talk. I shared this story of the 10 years ago. On my talk, it is recorded, it is on the YouTube. I said, Toronto will become a city that is not a place for everyone. I got a lot of backlash that they said, who am I to talk about this like that? When you are a cosmopolitan city, when you are located in a country that is really attractive for immigrants, that's the reality. Toronto has become unaffordable, but Toronto will still become attractive because of the job market, because of the newcomer, because of the rental. So people who invest in the Toronto housing in a long run, they will win. If you're in the business of just basically in the short run in real estate, you shouldn't be in the real estate investment, because the short run, it's a risk. 1 year you win, 1 year you may win not the way you expected, and maybe for 3 years you don't win. So year to date in 2023, by the end of 2023, the condo market basically number of the transaction dropped by 54%. Housing dropped by 37 to 40. As you can see, it was a lot higher. There were many condominium developers that they came from September of the 2023 till almost about November, launched project, and they basically were under the notion of we still can ask for $1,600, $1,700, $1,800, but they basically were not successful. Right now, the average price is sitting at about $1,200 versus what $1,700, $1,800. So it is a very attractive and healthy market. In the last 2 months, there were a couple of launches of the project, one in Richmond Hill by Green Park, a couple in downtown, and the developers, the solid developer is the key. And I'm sure Zaragon team can assist you in that. You choose the right developer, a developer that has a historical transaction, historical performance, and a deep pocket that they can navigate the market up and down. And developers are now offering tremendous incentive, such as the long payment plans, such as cashback. Some I saw the other day, which was really interesting. Maybe I should go to that developer and ask Ari if can help me. They were offering commission plus also a Porsche 911. So I don't know who is that developer. So I would maybe Ari can tell me later on who is that developer. Anyway, so rental market is gone through the roof. Last year had an increase of the 9% in the rental market. That's madness. Average one bedroom rental in city of the Toronto is anywhere between about $2,500 to $2,700. There are multiple debate about the landlord tenant tribunal. There are now discussion in the Ontario legislation that the non-payment of the rent is for automatic eviction. I am not against anybody who is tenant for just the full disclosure, but I think we really need to reform our tenant and landlord act, because there are people in the market that are just trying to take advantage of the system. That's another social benefit that is being taken away from the Canadian because of the massive burden of the incoming immigrant and backlog of the files and application. We need to reform the system. We need to have a proper personnel so that people won't take advantage of it. And I think it will happen. It's all going to happen during the next election. So we talk about this. You can see in Richmond Hill, in Richmond, BC, the rents are higher. East York, $2,400. Vaughan, $2,600. These are all for the basically one bedroom units. So how many homes we need? CMHC did a report a few years ago, and the province of Ontario also did their own report. They said we need a 1.5 million homes in the next 10 years. The number now has increased to 1.85 billion, meaning 180,000 homes you have to build on a yearly basis. The maximum amount of the home we have ever been able to build on time is 110,000 homes. So that means every year by this formula, we're going to be $50,000 to $70,000 homes short. So I guarantee you in 3 years from now, this number will jump to 2.2 to 2.3. This is the real proof that if you haven't bought a property in Ontario, in GTA, you better act fast, because I guarantee you 10 years ago, I said that Toronto won't be a place to live. 10 years from now, I will tell you the greater GTA won't be a place to live, because you end up maybe living in Orillia, north of the Barrie, and you're working in downtown Toronto. So the sooner you enter to the market, the better that you have the ability to basically build the asset. And don't be too picky. Doesn't matter, is it 500 square feet, 600 square feet, if you're entry level, just enter into the market. That's the best advice I can give you. So if you look at it, the housing start in Canada is, interestingly, instead of we have an increase in the housing start in Ontario, we have now decreased housing start. Developers are not building the way we want. Developers are fed up with the government in terms of the incentive that was offered to them. Nobody wants to build affordable housing. Affordable housing is only going to happen if the federal government and provincial government give you a land lease, which is the basically national land, that there are massive amount of the land that we have in this province, and offer tax break for years to come. Why would a developer even build a rental property, which is going to cost them easy about $600-700 per square foot, contrary to the condominium, and then the rate of return on a rental is capped by the rental tribunal because they have a limitation on increase. And if they have going to face in terms of eviction of the bad tenant, nobody want to do that investment. The only way that this can be done, that the province and federal, they become partner with developer. Let's imagine they do that. How can we build these homes or condos, or even forget about the community housing fast? We need labor force. Sadly, the immigrants that we are bringing, they are not in the skilled worker of the construction area. I referred to this in my last few topics. Maybe it's a sensitive topic. Let's take a look at the China. Let's take a look at United Emirates, Dubai. And yes, they imported workers. Yes, there are discussion around the globe about the human rights, about this is not right to do, but that's what we need in Canada. We need to bring construction worker, temporary construction worker, and of course, protecting them based on their rate, protecting them with their human rights, with the right of the workers. But that's the only way we can build fast. We need to build 200,000 homes a year so we can get ahead of this negative construction quota. Otherwise, we will always have the same issue and it will never get solved. Share of the condominium apartment as an investment. A lot of people, they blame investor. They said, oh, investor, they screwed up the market. Investor or this, investor or that. If you take a look at this chart, the non-resident investor, non or out of the province investor, the non-residents, let's talk about the non-residents. Non-residents is someone that doesn't have a work permit, student permit, landed immigrant status. Those are the ones that are true non-resident. Somebody who is visiting the Canada and just buy a property and renting it. So what is happening in Canada, which is also, that's also needs a part of the reform of the immigration, the non-Canadian residents, the one that they work abroad, but they have their family lives here and they have a higher income abroad and they're investing in the Canadian real estate market. That's a segment that the government needs to differentiate, tax them at a different rate rather than tax them at a Canadian because they have a Canadian residency. We really need to take a look at them. Are they true residents in Canada or they are not? Have they impacted the market, those people? Yes, because if you take a look at it, in province, investor are the highest group. But if you take a look at out of the province investor, you add them up with the non-residence investor and the business, they're also the other half of the equation. And those are the people are usually with the liquid cash asset and they put a hefty down payment and they have the ability to buy and scoop these condo market. So what's the solution? Everybody's confused what I'm going to do. Canada at the moment is caught in population trap. There was a report by RCMP was leaked, and the RCMP, everybody says RCMP and housing. What's the relevancy? RCMP is actually warning the federal government that we may have housing riots in Canada because of the affordability, because of the issues that the consumers are crying. If we don't solve, if we don't have a correlation of the population, which is the demand to the supply, it will not work. Who brings the immigration is the federal government. Who is supposed to give them the housing is provinces. So two bodies, two sort of the level of the government, they don't talk to each other properly. And that's a major issue that is happening. Toronto is among the sort of the highest unaffordable housing market in the global scale. Still, it's not on the highest end. It's sitting at the medium. It's sitting at the rating of the 9.5. The highest rating is about 18. Feeling towards the federal government, resentment, dissatisfied, and a lot of people are not optimistic that under the leadership of the Liberal Party and Justin Trudeau, this will happen. View on immigration quota. It's very interesting. Canada is built on diversity, inclusion, and immigration policies. And the generation of the first generation of the immigrant or the second generation of immigrant, now they have anti-immigrant policies. So, which I don't blame the group, including perhaps many on this call, because many of us, we live, work in this beautiful country, we contribute towards the tax and everything towards this country, and we are really fed up with the policies that has happened over the last two course of the federal government. We talk about this. Toronto is sitting at the second highest building cost of the construction in the world. So that will not go down. Why the cost of the construction is high? A lot of it is contributed towards the levies, development charges that the city charges. The city of Toronto is broke. The city of Toronto has a massive, massive deficit. And when you taxes, property taxes, I travel a lot around the world for business, mostly to US. Let me share this good news with you. Our property taxes in the scale of comparison to any city in the United States, we are nothing. We are paying 0.35 of 1%. Majority of the cities in US are 1% of the value price of your home. So $1 million property in US is the people, they pay almost $10,000 in the property tax. And in Toronto, I know homes with a value of $3 million, they are paying maybe $10,000. So we are really cheap on the scale of the taxes. We talk about the inflation target. I think he will reach to it eventually. Probably not this year. Probably the next year he will reach to that. We talk about in details about the strategy. We need a construction labor. My opinion is only thing that we can solve the issue of the sort of a supply to meet the demand. Because let me be clear, the demand will increase. Even if they bring it back to 600,000 homes, based on the 600,000 homes, we needed 150,000 homes a year, but we only managed to build 100. So we every year going to be short by 50,000 homes. We need the labor. We need to import the labors. So what's on the mind of the consumer for 2024? Interest rate. Interest rate will come down. Be aware, the minute it's already started the rebound of the market. So if the interest rate, you wait till June, you end up paying higher for the prices, okay? Supply demand issue will continue for years to come. When will we basically be back on the peak of the market? When the sellers are asking, if there are sellers in this call, when the interest rates start dropping. The minute the interest rates start dropping, guess what? It's good for buyer, it's good for sellers, it's bad for buyers. So buyers, they got to make a decision now. The sellers, it depends on your plan. It depends on your motivation. Let me share also this with you. You sell high, you buy high. You sell low, you buy low. So there is no win here. If you're planning to downsize, it's a different story. If you're planning to a condo market, it's a different story. So make sure when you sit down with the right professional, your Zaragon team, you consult with them, really share what's your motive, what is your why are you moving. If you are concerned about the financial burden of the mortgage and everything, that's also different motive, different scenario. But if you're thinking the mortgage rate is going to go back to 1.5, 1.8, good luck. We will be sitting probably for 5 years mortgage, which is back to pre-COVID, anywhere between 3.5 to 4, and the variable will be anywhere in the range of 3.5 to 3.75 with a discount that they will give you. Best bet for 2024. If you are business, if you are a commercial investor, it will be industrial unit investment for logistic, because everybody, retail is downsizing, malls are downsizing. Multifamily residential. Canada was a proud country, 70% home ownership, 30% rental. Canada is eventually become like a European country, will be 40% home ownership, 60% rental. So invest in multi-residential properties, duplex, triplex. The government is very, very aggressive in terms of giving permits. Somebody buy a single detached home to convert it to 2 or 3 homes. And lastly, maybe next 6 to 8 months is a condo assignment. I am confident within the 6 to 8 months from now, you will see also those opportunities, and condo assignment will depreciate and maybe will disappear. Thank you very much. I'm here to answer any question that you have.
Thank you, Steve. So we got a question here. I'm going to put it up on the screen. So is it a good idea to buy pre-con right now and flip before closing? Because there are so many distressed pre-con units on sale right now from people who wanted to do the assignment flip, but cannot.
Absolutely. It's a great idea. Let's say if you buy a pre-con assignment right now, but the closing is going to be a year or 2 years from now. We definitely know the condition of the market because of the lowering the interest rate. It will be better compared to today. If you're expecting the same rate of return of the pre-change of the condo market or the interest rate, no. But if you are rational, you're reasonable, I'll give you a math example. Let's say it costs you to put $100,000 deposit now to get on the side or whatever it is. And then if it's less than 2 years, you get $50,000 on your $100,000 do the rate of the return cash on cash. Yes, it will definitely. But the key for you is this: when is going to be the actual occupancy and closing date? If the actual occupancy and closing is going to be 2025, do it. 2024, you're maybe running on a very tight margin.
Yeah, and just one thing I wanted to add to that about seeing people who are right now in distressed possessions trying to flip on assignment. We do a lot of pre-construction. We also do a lot of assignments on the buying and selling side. Out of the 100, 120 assignments that are listed right now, there's a reason why I believe only one of them is actually from one of our past buyers, which unfortunately was because they had passed away. There's a right and a wrong way to purchase pre-construction. The last couple of years, many people purchased pre-con with bad advice, with wrong intentions, thinking they can make a quick buck. Those that are in this space know that assignment is a great flip to do if it makes sense at the time, but that at the end of the day, you got to be prepared for closing. So we'll be able to help that out on identifying what is a good pre-con to buy now. But at the end of the day, assignment should never be the number one goal. Closing needs to be an option in the back of your mind. Otherwise, you get pinched like how a lot of people are right now that didn't have a plan B.
And yeah, one more.
Also, keep in mind one thing that you can only assign once. So once you buy on assignment, you have to be the one closing, because then the next after closing you can flip it. You cannot buy an assignment and sell on assignment again prior to closing.
Yeah, one more thing to add to that, point there is that in any subsector of the market, whether it's pre-con, assignments, or resale, there's a percentage of product that makes sense, and there's a percentage of product that doesn't make any sense. So what you're buying is really important, especially if the play on that is to flip it. You got to be pretty calculated. But there is product right now in today's marketplace that could make sense in a flip, but you have to be numbers driven.
Yeah, you got to also remember. I mean, I go back to Daniel's comment. If your goal is only flipping, you better make sure that financially you are prepared if the market change. We do predict the market get better, but we are also don't have a crystal ball. If suddenly the government introduce new changes and new policy, anything could happen. So, but also people got to remember, real estate is a long-term plan. It's not a short-term plan. The people that they are in the distress cells and in trouble because they had a kitchen table talk, they got a bad advice, somebody told them, go buy this. We were talking the other day with the team that somebody bought a condo downtown Toronto in 2019, which the prices were not even close to that range, for $1,900 and $50 per square foot. And now they are reaching to us, they're saying, save us. We can't do magic. We can't. Nobody in the industry can magic. That's why I always said, when you have a motive of the investment, doesn't matter, condo, houses, or anything, ask yourself this question. If the market for a year become balanced, become flat, can you manage, and you rent it again, predict the rent price. Let's say you are in a deficit of the $2,000 a month. Can you manage $24,000 for 1 year? And if the answer is yes, do it. If the answer is no, stay away.
Very true.
Or I may add this. Don't focus on the investment side. Oh, I need to be downtown Toronto. I need to be in this really, really nice pocket because emotionally, me and my partner, we love that pocket. Investment means where you get the best rate of return. If it's a Pickering, it's a Pickering based on your money. If it's a downtown Toronto, based on your money, downtown Toronto. So don't make an emotional decision. Make a mathematical and rational decision.
Great advice. Great advice. Steve, one question for you. Would if the options that you have would be a super small unit in Ontario, or a larger unit outside of Ontario, like in Calgary, where do you think would be a better place to invest?
I would invest in Ontario for one simple reason. Calgary market is heavily dependent on energy sector. As we all know, another failure of Canada, thank you to not being able to negotiate through a red tape of the preserved land to get the pipeline to the water. So Canada refining oil is the most expensive refining oil system on the planet. So yeah, Calgary's government is promising we are attracting the tech sector. We're going to do this, we're going to do that. But you got to remember, by the time they do that, it's 10, 15 years plan. Calgary market is great for somebody who is really end user. Maybe at now they get a job, they want to raise a family there. Just keep in mind the weather is really crazy. If you complain about the Toronto, good luck with the Calgary. But if you're going for investors, no, I wouldn't. I rather buy a condo in Barrie. I'd rather buy a condo in Whitby. I'd rather buy a condo in Hamilton. I'd rather buy a small condo in Toronto. I'd rather buy a resale condo in Toronto, which is the prices are better than new condo. And I know the demand is so high here, and I can rent it at a higher price and have a good. Don't always think about, oh, I'm going to buy a large condo over there for 400,000 versus 800,000. But you got to also remember the rental market, what is happening.
One other question for you. Do you see also the partnerships in terms of purchases? Is that also on a rise? Like, because the pricings are going high, so people gather friends or family members, few of them, to purchase a property? Is that going to be a common thing here?
Yeah, it is going to be a common thing here, definitely. So if you take a look at the chart that I talk about, the in-house investor, let me bring it back. If you take a look at this chart, it's almost talk about that the in-province investor is a blue. 22.4% are in-house or in-province investors. So this group of the people are those regular Canadian residents that they realize in the last 10 years, oh my God, real estate has been good. My friends, my family, everybody's investing, so they start to invest. And now this group is saying, hold on a second, my disposable cash is not enough if I want to do the second one, if I want to do the basically the third one. Typically, those investors within the province are what we call not the professional investor that they have series of the homes or condos. An average Joe has maybe 2 or 3 investments. And now there is a big notion among them with the family, with the right person, and do the investment. My advice for you for the partnership investment is, again, back to the question, ask them, if something happened to the market, do you want your money immediately? Are you going to force me to sell the unit or no? Or can you manage it with me going forward? The beauty, what I love about the partnership, which I do it on a regular basis for the last probably 20 years, is leveraging the risk. If I partner on a condo, let's say with Ari, and if we are on a deficit of the $3,000 a month, you rather have a deficit of the $3,000 a month or $1,500 a month. Very simple math.
Yeah. Oh, that's good. We have another comment that, Jonathan, you may want to bring it up, that Calgary is looking attractive to investors owing to friendlier tenancy laws, unlike in Ontario. What do you say about that, Steve?
True. Any provinces that have I see the changes with the tenancy law going to happen in Ontario sooner or later. We are very more diversified here. So there is a lot of sensitivity towards the changing this law versus a province of Alberta or eastern boundary of the Canada, maybe Nova Scotia and Newfoundlands. Eventually, this tenancy, everybody knows, going to change. So federal government might interfere. Rest assured, also the next election on federal level, PC will win, and we will win massive landslide, and hopefully they will implement some of the policies in terms of the housing. But if you are going there only for the friendly aspect of the tenancy, also consider this. You are having a property literally 4 hours the flight time, and you really don't know the nuances of that city because you are not there. If you're living here, I wouldn't do it. If only your price point is your goal and objective, with a similar price point, you can buy a condo in GTA and suburb, but maybe not a new condo, perhaps a resale condo.
And one thing I can tell about the tenancies, yes, they are friendlier, but first-hand experience, you can set the numbers to whatever you want, but there are not as many demands. So it will take months before you actually rent out. And yes, you can kick them out easier, but as far as the rental is concerned, you don't have the cap on the rents amount. However, when you know that it's a difficult market, you're forced not to raise the rent anyways.
Yeah, I only recommend Calgary to two types of people. Number one, if you're moving there, as Steve said, and number two, if you've already, conquered the Ontario investment. So you've already built up your portfolio. You've already put your foot in the door in the Ontario real estate market. Why? Because if it's your first investment going into Calgary, then I can tell you with confidence, you're not going to be able to come back to Ontario to do the second or the third. Very simply put, the Ontario, growth historically goes at a higher rate than Alberta ever has. So very quickly, once you put your money on your first investment in Calgary, it'll be very, very difficult to come back and break into the Ontario market. Oftentimes, you see people that have already built a portfolio in Ontario, and now they're looking for something that is maybe going to give them more of a positive cash flow. That's when we say, okay, maybe we can look at Calgary as well.
And
Good
one
question.
thing, I guess a lot of people, they get, tangled up is the fact that Calgary doesn't have the land transfer tax. But in Calgary, they have GST. So that is something that it would be more than your land transfer tax that you need to pay. Now it up to the bank that they may allow the GST to be wrapped up in the mortgage, but quite often they don't. So it's something that you have to pay on top of your mortgage at the time of closing. So hands down, I would always say stay in GTA. If not, stay in Ontario. And if not, then shoot yourself to Calgary.
1, 2, 3. Stay in GTA, stay in Ontario, or shoot yourself to Calgary. 1, 2, 3. Any other
Awesome.
questions before we wrap up for our Thursday webinar? I guess that's all we've got. Steve, appreciate it. Thanks for the time.
Yeah, thank you so much. Again, you guys know us, those that you already know us, but if you don't, Jonathan, Ari, and Jonathan, we are the Zadigan Group here. We got a great team behind us. You've probably been in touch with some of our agents. One thing that's great about us, as Steve knows, is we're not just local, we are global as well. So whether it's pre-con or assignments, it's across Canada, US, Caribbean, Europe, Dubai, which only adds value and perspective to help you guys out in your journey, right? So hope this was informative. Thank you, Mr. Steve Tabrizi, and don't fall asleep on your flight.
Is obviously we do these webinar series, so we've got 2 to 3 of these coming out per month. So, you know, be sure to look out for your emails or go on our website. You can see all the upcoming webinars that we have going on, and hopefully we'll see you guys soon.
Take care, guys. Have a wonderful
Thanks.
time.
Have a good night.
Thank you so
Thanks,
much
Steve.
again. Thank you, Steve.
Bye.
Thanks
Have
a
a
lot.
safe flight.
Take care. Bye-bye.